The first cryptocurrency, Bitcoin, was launched in 2009 by an anonymous individual or group known as Satoshi Nakamoto. Its purpose was to create a decentralized digital currency free from government or financial institution control. Cryptocurrencies utilize blockchain technology, a secure digital ledger of transactions that is distributed across a network of computers. This system aims to ensure transparency, security, and resistance to tampering. There are over 22,932 different cryptocurrencies in existence as of October 2023, CoinMarketCap, but their activity and value vary greatly. Bitcoin remains the dominant player, holding a significant market share compared to most others. Cryptocurrencies can be used for various purposes, including online purchases, peer-to-peer payments, and storing value. However, their adoption as mainstream payment methods remains limited due to factors like volatility and regulatory uncertainties. Mining is the process of adding new transactions to the blockchain and creating new units of cryptocurrency. Miners use powerful computer systems to solve complex mathematical problems, and are rewarded with cryptocurrency for their work. Several factors can influence the price of cryptocurrency, including supply and demand, media coverage, and government regulations. Cryptocurrency prices can be highly volatile, meaning they can fluctuate significantly in a short period. Cryptocurrency wallets are used to store, send, and receive cryptocurrency. These wallets come in various forms, including software wallets, hardware wallets, and exchange wallets. Security is a crucial aspect of cryptocurrency ownership. Users need to be cautious about protecting their private keys, which grant access to their cryptocurrency holdings. Phishing scams and hacking attempts are potential threats. Regulations surrounding cryptocurrency vary globally. While some countries have adopted a relatively open approach, others have implemented stricter regulations or even bans on cryptocurrency use. Cryptocurrency is still a relatively new and evolving technology. Its long-term impact and potential future applications remain uncertain. It's crucial to approach cryptocurrency with caution and conduct thorough research before making any investment decisions. Initial coin offerings, ICOs, were once a popular method for startups to raise capital by selling new cryptocurrencies. However, concerns about scams and regulatory scrutiny have led to a decline in ICO activity. Stablecoins are cryptocurrencies pegged to the value of a stable asset, such as the US dollar. This aims to address the volatility issue by providing price stability and facilitating easier transactions. Decentralized finance, DeFi, refers to a growing ecosystem of financial applications and services built on blockchain technology. DeFi aims to provide an alternative to traditional financial intermediaries by offering services like lending, borrowing, and trading without the need for centralized institutions. Non-fungible tokens, NFTs, are unique digital assets representing ownership of real-world or virtual items, such as artwork, music, or collectibles. NFTs are stored on a blockchain and their ownership can be verified and tracked transparently. Environmental concerns have been raised regarding the energy consumption associated with cryptocurrency mining. Some cryptocurrencies are exploring alternative consensus mechanisms with lower energy footprints. Central bank digital currencies, CBDCs, are digital versions of traditional fiat currencies issued and controlled by central banks. Several countries are exploring the potential benefits and risks of implementing CBDCs. Cryptocurrency adoption is increasing in various sectors, including gaming, supply chain management, and cross-border payments. However, widespread adoption remains hindered by several factors, including infrastructure limitations and regulatory uncertainties. The legal landscape surrounding cryptocurrency is constantly evolving. Governments worldwide are grappling with how to regulate this emerging technology, and the situation can vary significantly across different jurisdictions. Security breaches and scams remain a concern in the cryptocurrency space. Users need to be vigilant and exercise caution when interacting with cryptocurrency exchanges, wallets, and other platforms. Understanding cryptocurrency requires continuous learning and staying informed about ongoing developments in the industry. It's crucial to rely on credible sources, diversify information intake, and approach cryptocurrency with a critical and cautious perspective. Proof of stake, POS, is an alternative consensus mechanism used by some cryptocurrencies that aims to be more energy efficient than proof of work, POW, mining. POS relies on validators who stake their cryptocurrency holdings to secure the network. Smart contracts are self-executing contracts stored on a blockchain. They can be used to automate various tasks and agreements, potentially revolutionizing how contracts are formed and executed in various industries. The Lightning Network is a scaling solution for Bitcoin that aims to address its limitations in transaction speed and fees. It operates as a second layer on top of the Bitcoin blockchain and enables faster and cheaper transactions. Security tokens represent ownership or rights to real-world assets, such as stocks, bonds, or real estate. This opens possibilities for tokenization of various assets and creating new investment opportunities. Cryptocurrency exchanges allow users to buy, sell, and trade cryptocurrencies. Different types of exchanges exist, with varying levels of regulation and security features. It's crucial to choose reputable and secure exchanges for safe trading. Decentralized applications, dApps, are applications built on blockchain technology that operate without a central authority. This allows for censorship resistance, transparency, and potentially more user control compared to traditional applications. Play-to-earn, P2E, games have emerged as a new wave in the gaming industry, allowing players to earn cryptocurrency or other digital assets through playing. This raises questions about the intersection of gaming and financial incentives. The rise of the metaverse, a virtual world with its own economy, has led to exploration of the potential role of cryptocurrency in facilitating digital transactions and ownership within this virtual space. Several major corporations and financial institutions have begun exploring the potential applications of blockchain technology and cryptocurrencies. This could lead to increased mainstream adoption and integration in the future.